Federal Reserve Chair Jerome Powell announced on Wednesday that an interest rate cut was not happening, for now at least.
Today, the Federal Open Market Committee decided to leave our policy interest rate unchanged.
This wasn't completely unexpected, however. Bankrate senior industry analyst Ted Rossman, in our interview last week, was certain that we would not see an interest rate cut.
They're not going to adjust rates next week, but a lot of people are going to be reading the tea leaves of what Jerome Powell and his colleagues have to say.
Powell also offered an outlook on the country's economic growth rate. The Fed's latest projection for annual gross domestic product growth, or GDP, suggests a slowdown in the near term.
In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years.
With regard to the job market, which is also under the Fed's purview, there's not significant concern.
The labor market is not a source of significant inflationary pressures.
Taking into account multiple projections for this sector, the consensus was a stable unemployment rate ahead.
The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years.
Powell noted that what results from the Trump administration's approach to revising trade, immigration, regulation, and fiscal policy will have a broad impact, though the kind of impact, negative or positive, remains a question.
Uncertainty around the changes and their effects on the economic outlook is high.
Reporting in Toledo, Ohio, I'm Jaden Jefferson.